I want to continue this market conversation. We're joined now by Shawn Cruz, Senior Market Strategist at TD Ameritrade. Shawn, I want to talk earnings first. We had seen earnings estimates essentially raised, and the beat rate right now up over 80% so far. How much do you see earnings really being baked into some of the prices that we're seeing right now in the markets?
Yeah, I still think there's a little bit of a potential for earnings to drive further upside in the market. I think maybe that might be a little bit more muted than it would be otherwise if we didn't have the Delta variant that was sort of lingering and was a major concern, I think, for a lot of investors and analysts. But I think right now, the fact is when you get into hard times, we saw this during the financial crisis. I think we saw a lot last year. One thing companies do when the top line is sort of out of their control is they really tighten things up on the expense side of things, on the spending side, and they become much more efficient. And so I think seeing that play out last year, a lot of companies that were focusing on efficiency, that can translate into maybe some of these beats and making that top line revenue, when it does recover, come in at higher margins, which at the end of the day is something that will benefit equity investors, because now more of that dollar coming in the top line flows down and hits equity investors. So I think that could be one thing to keep an eye on. I think there is a little bit of that at play here with some of these beats that we're seeing. I think it's worth noting where some of the strongest performance actually in those consumer discretionary names, where so far from what we heard from, they've had an earnings surprise of about 37% or so, which is sort of leading the pack there amongst all the sectors.
Shawn, can you share with us some of your top picks at the moment? Where are you concentrating your money?
So one thing that I think I'm really focusing in on here is going into those chip makers. And I know it's been a very interesting week or two. I'm hearing from some of them, but I am looking into the semiconductor sector and trying to find some of those names that are in a good spot where they're not going to have to put it out too much CapEx. And I think that's going to be the big issue for the semiconductor companies is how are they going to be able to bring a lot more supply online and also keeping CapEx or expenses under control. That's going to be a key thing to look at when you're evaluating those companies. But I do see that this tightness in the chip market being in place for quite some time. We're hearing that from a lot of CEOs. So looking in the semiconductor sector, I think you can find some opportunity. And even looking at a name like Texas Instrument on pullbacks like we're getting after their most recent earnings report, this could become an interesting entry point for investors that are looking for a name to pick up.
I'm curious to know, Shawn, how you're looking right now to protect against some of those downside risks. We'd seen that sell-off on Monday. You're mentioning that Delta variant as, again, a potential headwind going forward. How should investors really try to hedge against some of those downside movements?
So one thing is, when we think of hedging, I think a lot of investors, maybe some more advanced investors, would go to maybe buying options to protect your portfolio from the down from any sort of significant move lower. But one thing you can do right now, I think, is just remain a little bit more balanced, just in terms of your exposure and where you're at in the various sectors. I think early last year there was the very obvious stay-at-home trade, which certainly favored overweighting some of those tech stocks. Then we got into the reopening trade at the end of last year, started this year, which favored those cyclicals, some of those small caps. I think right now, if you want to manage the ebb and flow of what could happen just as we get more and more headlines out on the Delta variant, being a little bit more balanced in your approach could be one way where you minimize some of that volatility. So on days like Monday, where you do get some of these stronger pullbacks and it might feel like nothing's really going to work, at least you're not entirely concentrated in one sector. So you should probably expect to maybe be able to do a little bit better than someone who is just holding on to a very, all tech, all cyclicals, whatever that might be. I think a balanced approach is definitely where you want to be going into the end of summer and start of fall.
All right. Shawn Cruz, Senior Market Strategist at TD Ameritrade. Thanks so much for joining us.